The Federal Reserve is poised to cut its benchmark interest rate in September, according to minutes from its July meeting, as long as inflation continues its downward trend. The vast majority of Fed officials believe a rate cut is appropriate, given the recent decline in inflation, which has fallen from 7.1% in 2022 to just 2.5% now. While the Fed kept its rate at 5.3% in July, Wall Street traders are already pricing in a rate cut in mid-September, which would be the first in 4 years. This decision is expected to lower rates for auto loans, mortgages, and other forms of borrowing, potentially boosting stock prices. The Fed's next steps will be further clarified by Chair Jerome Powell's speech at the Jackson Hole Symposium on Friday. However, a rate cut so close to the presidential election could put political pressure on the Fed, as some, including former President Trump, argue against cutting rates during an election year. Democratic senators have also urged the Fed to cut rates, arguing that delaying a warranted cut would be a political act. Despite the political complexities, Fed officials are emphasizing their focus on economic data, and 2 Fed officials have noted that as inflation cools, inflation-adjusted interest rates rise, supporting a rate cut. Analysts expect Powell's speech to signal the Fed's confidence in inflation returning to its 2% target and potentially provide clues about the number of rate cuts this year. While recent data has presented a mixed economic picture, with weak hiring in July followed by strong retail sales and a decline in unemployment claims, the overall trend seems to be pointing towards continued economic growth and justifies a rate cut.